reframing Coinbase as a platform is a very big thing, right? Because people are still used to the old world where it's an exchange, right? They think of it's an exchange that offers services, but what you're actually building is the platform for all of these rails to be built on, whether it's stable coins, whether it's asset management, whether it's trading, whether it's prime broking, whether it's anything, they can just build on top of what you've built, which is big. And I think, it's one of the things that will probably drive alt season is the fact that there's a lot of treasuries coming in all sorts of products. So it's not just Bitcoin, it's not just ETH, it's pretty much everywhere now, right? You're seeing them all in the making. Everyone's having conversations, everyone's hearing about them, but it seems, pretty much everywhere across the board.
Hey guys, welcome to Everyday Finance. As both gold and Bitcoin continue to rise in value, Raoul Pal draws attention to the fact that Bitcoin is once again rising in tandem with gold. The price of Bitcoin has reached $116,593, and bulls are keeping an eye on the critical resistance level of $117,500. Analysts believe that if the price were to break through this level, it would have the opportunity to reach a new all-time high. In the meantime, gold reached a new high of $3,895 per ounce, which has fueled the optimism that Bitcoin could soon demonstrate a performance comparable to that of gold. A significant number of traders are of the opinion that an increase in the price of gold could result in a capital transfer into Bitcoin, particularly as the market's confidence in traditional assets reduces.
So I don't even know where to start because there's so many things to talk to you about. But what are you trying to do with the institutional side? Because a lot of people don't know that side of the business unless you're an institutional customer. What are you trying to do? What are you building?
All right. So to keep it simple, when we say institutional, I'm referring to the world's largest hedge funds, asset managers, wealth platforms, banks, financial services firms, tech firms, sovereigns, sovereign wealth funds. So really big institutional managers of capital. And what we're trying to do is to enable all the things they want to do within crypto in one space. And so that's sell it, buy it, stake it, finance it, have a holistic experience. And so the big play we're making is a platform trade. It's a bundling of services. And, we had our institutional summit this week, Raoul, I was just telling you about. So we've got 500 people that came to New York and we showed this progression of all the things that we've built over time. And it's absolutely amazing. So we've managed to accumulate, like, for example, stats around our success would be we were chosen for 8 out of the 11 Bitcoin ETFs in the US. We've got 81% of all ETF assets. We're the clear choice for all the new crypto custodians, crypto treasuries that are coming out. We've got 40% of the world's largest hedge funds have all chosen Coinbase and have onboarded here. And so I think our differentiating point now, 5.5 years later, is that we have like the marquee client franchise to die for.
So we'll talk about the clients and then we'll talk about the infrastructure side you're building as well, because that's the hidden story, which is massive. But on the client side, did you see the light bulb moment happen, the light switch turn on as soon as regulation changed? What happened?
Well, arguably the light bulb moment came on for clients prior to the last down cycle. I mean, the ETFs came during still a moment of great uncertainty, and that was a light bulb on for many, but not everyone was activated. Then we had the election and the onset of actually the tangible progress of regulation actually passing. And right now we're having a crazy moment of FOMO. So all the people that are already involved have a huge head start. And everyone else, you touched on it a minute ago, but we've launched and sort of rebranded an existing offering called Crypto as a Service. So all the infrastructure that we built, we're now offering to everyone else that wants to get in the space. So think about custody as a service, wallets as a service, trading as a service. And so that's powering, we announced some quite big partnerships with Webull, PayPal, eToro. So it's pretty cool. We have think of it like direct client acquisition, where people are onboarded onto the platform like a hedge fund. And also think about like enterprise sales would be the tech term. or platform sales, and that's powering everyone else that's sort of catching up to being involved in crypto.
Yeah, and I think reframing Coinbase as a platform is a very big thing, right? Because people are still used to the old world where it's an exchange, right? They think of it's an exchange that offers services, but what you're actually building is the platform for all of these rails to be built on, whether it's stable coins, whether it's asset management, whether it's trading, whether it's prime broking, whether it's anything, they can just build on top of what you've built, which is big. Now, are you seeing, because not the last time we spoke, but a while ago when we had breakfast, you were talking about the banks and others using Coinbase as the rails because there's no point building when you build so much already.
Yeah, so we actually, I'm keen to announce we had our first GSIB, so that means in banking terms, really, really, really huge bank, it was actually 4 years ago we started the conversation. They flirted with the idea of, build or partner, and in the end decided to partner. And so we're going to be the custodian in all things crypto for all things digital and crypto, however they frame it. So that's a big deal. Those mandates like BlackRock and others are, years in the making. Now that the U.S. is activated and everyone sees regulation coming, we have even those that have been in the space for a while are coming to us, and all of a sudden we have active conversations across. Think of like a big U.S. bank that has a wealth platform, a markets platform, a custody platform, a trading platform, and we have live conversations on all of those.
And how big a deal was the stablecoin thing? Because I think stablecoins, I still think people are underestimating the sheer size of this. You and I grew up in the Eurodollar markets, which were vast, and that's all this is a tokenized Eurodollar that can go down to individual level, as opposed to a Japanese bank or whatever, where most of the Eurodollars came from, or Deutsche Bank or whoever it was. But this is much bigger than people think. What's your view on the whole stablecoin thing?
So if we've been at it for a while on the investment case to own Bitcoin or ETH or other things, and that's drawn the first wave of capital in. But there are a bunch of people who are senior and influential and are looking at the asset class and saying, that's not the investment case isn't the thing that we want to think about. But then there's kind of everyone else. And the everyone else crew is now look at this as a technology, and a technology that can move money. And when you think about the vast sums of money, I had a bank on stage yesterday in my client panel, and we were talking about just how far we've come at Coinbase, and we were flexing on some stats and saying, we have almost $250 billion in custody. And we talked about stablecoin payments, and they said, listen, we settle $9 trillion a day. I mean, the TAM is, enormous. So that second crew that has yet to activate is looking at just the vast sums of what they trade, what they settle, and how they move money, and saying if this is better, cheaper, faster, quicker, and regulatory compliant, then we want to reevaluate Coinbase as an infrastructure provider to us. So I think the stablecoin and payments use case is finally kind of here. I've been talking about it for the 5.5 years that I've been here, but now that market caps have grown of stablecoins and we have legislation and Genius Act on the way, I think the stablecoin wars are on. And we're going to have like the second wave of capital and entrance is going to be focused actually very much so on payments.
An optimistic outlook prevails in the market. Despite the fact that fears regarding fake-outs and probable liquidations continue to persist, both Bitcoin and gold are currently testing important resistance levels, and investors are keeping a careful eye on how this dynamic develops throughout the market. An impending confrontation between these two safe haven assets is indicated by the growing correlation between them. This confrontation may be the deciding factor in determining whether Bitcoin genuinely fulfills its position as digital gold.
And how does your partnership with Circle work in this?
Oh, that's all out there in the press. That's been clawed over and talked about. But we have a revenue share, and whether assets USDC is on platform, that it kind of allows us to have a bit more of the interest income relative to when assets are off platform. That'd be the oversimplification, but I'm rooting for USDC to be the stable coin that wins. But in the end, I'm a markets guy. You're a markets guy. The market decides. So while we may have that partnership with Circle, which is great, and I hope they flourish and I hope they win, I'm a markets guy at Coinbase. So I want a marketplace to exist, and it's possible that other stable coins first get adoption in other places and other use cases first. And, in the end, let the market decide, let the clients decide.
And I asked, I had Chad Cascarilla on last week. You remember you met him in Dubai from Paxos?
Yeah, he's awesome.
Yeah, he's a great guy. I asked him the question about what chains people choose when they're looking at stable coins. How do you think about that when you're looking at solutions in terms of chains? I mean, do you have to use Base, or can you use whatever solution the client needs because you have the infrastructure for pretty much everything? How do you think about that?
I don't really try to guide those decisions. I try to say, here, I'll be your tour guide. Let me do some introductions to Base. Let me show you how it works. It seems that people are flocking to Base for sure. They're making that choice by themselves without us necessarily having led them there. So I think everyone probably independently, Raoul, goes through their own due diligence before they find themselves here. Usually by the time they get to me, they've got a pretty good idea of how they see things, working. So I've got, insurance companies that want to collect premiums and distribute. I've got global retailers that want to do supply chain. I've got customers that want to do customer loyalty. I mean, like, the list is really long. And sometimes they come up, with the idea, and they've already got a preconceived notion of what stable to use. So my guess is if you can get the infrastructure set up and you can pave the pathway for doing the use case you want, the stable coins that you choose can be substituted in and out. Obviously, you need to be integrated to each chain, but in the end, we're probably going to have an interoperability thing that will facilitate all that.
And what's growing faster? The client investment side, so people coming in to buy the assets, or the infrastructure side? Or are you seeing both scaling at the same time? Because that's a lot to deal with.
It is a lot to deal with. There's like a rush of capital that's come back to this space, right? So now that you can see it in actually the public markets, right? You've seen the IPO window open. You've seen Circle and others come to market. You've seen all these crypto treasuries come to form, which is awesome. So capital's pouring into this space really quite quickly. I'd say the pipeline on the second part, which is the crypto as a service, is building really, really fast right now. So it's a really long pipeline. And the diligence around that just takes longer. So we've got, that's a longer sales process and diligence process than those that are already activated and on board. So, but both are in the process of peaking right now.
And what's your view on not the Bitcoin, the crypto treasury vehicles? You said they're awesome. For what reason, apart from obviously they're big clients, but what do you see, what service are they providing to the space? Because people are confused by them.
Yeah, I'd say access. It would be an easy one, like, a Japanese company, MetaPlanet. Japanese don't necessarily have the access to the US ETFs, and so that's an access trade to get long. You've seen, maybe we're not staking ETFs just yet, and so some of these treasuries are doing more active staking services. So they may, also have the ability to issue converts. Kind of copy the MSTR strategy playbook. And so if you buy into the notion that as they can continue to hit the capital markets for funding and then buy more ETH, or, do more staking or earn more yield. And so right now it's access and like the combined product. And so it won't last for forever because you'll have enough of these treasuries keep coming, and the premiums to what they own today will come down. But in this moment where things are kind of on fire, I'd say access and the bundled, the full bundle of services, the yield generation, staking, on top of owning the crypto and the ability to issue debt, keep buying, is what's attracting people.
And I think, it's one of the things that will probably drive alt season is the fact that there's a lot of treasuries coming in all sorts of products. So it's not just Bitcoin, it's not just ETH, it's pretty much everywhere now, right? You're seeing them all in the making. Everyone's having conversations, everyone's hearing about them, but it seems pretty much everywhere across the board.
Yeah, we had a guy you and I know, but I won't reference him specifically. He was on stage with me, a big macro trader that you know well. And he was saying, hey, Brett, listen, my thesis is that when perps come to the U.S., which is, this summer, it won't necessarily be alts first. There'll be Bitcoin and ETH for us July 21st. But as perps hit the U.S. market, he expects that product to be the number one by far and away, just like they are now, but onshore. And as those perp contracts extend to the alts, he's like, that's going to be the marker for the revival of alt liquidity and alt price action. And that's a pretty easy thesis for me to agree with.
And so what are you guys doing in perps? Because you made a bunch of announcements. What's the scope? You're starting trading soon, right?
Yeah, we've got a nano contract in both Bitcoin and ETH launching July 21st. So that'll be great off Coinbase derivative exchange. So I think the big thing there is that, to date, U.S. clients have had to figure out creative ways to access, offshore perp liquidity. And so being able to bring the perp product, which is arguably the best invention that crypto has in financial engineering, to the U.S., I think is going to be an easy and popular way for people to deploy capital.
It's going to drive that hedge fund flywheel for you as well, because that's a much more efficient use of capital.
After falling below $3,900 for a brief period of time last week, Ethereum has resumed its ascent above $4,100, demonstrating a remarkable resilience that is supported by the accumulation of corporate assets. The purchase of over 80,000 Ether in just 2 days, which is worth more than $340 million, was made possible by BitMine, which has been a significant catalyst. During the time when ETH is engaged in a downward channel, the market is being stabilized by the substantial buying pressure that is now present. If ETH were to break higher, it might go closer to $4,500, with $4,100 serving as support and $4,330 serving as near-term resistance. However, if it were to lose support, it could drive it back down to $3,900.